for other Asia stock market, I mean, the Nikkei 225 is another market that you can look at. Now, as you can see, this is a support line, okay, the previous support line, or rather the long-term resistance line. It is now not able to break through this, which suggests some weaknesses in this particular uptrend. So be careful of this, and if anybody wants to initiate a new trade, then better look at the look for the downside by looking at daily the daily candlesticks of the Nikkei 225, right? Otherwise, then I don't but one interesting thing to note is that okay, this is the previous high. Okay, this is the previous high. If it breaks below this previous high over here, then there is a likely case that we might see a kind of head and shoulder forming. So this may be we are looking at probably some kind of false breakout over here. If next week it falls below this the previous high, right? Now if then that happens, then it's better to liquidate any of the Nikkei 225 stock in these component stocks, or liquidate any positions on the Nikkei 225 indexes itself, okay, because of this false breakout. Korea, it has always been a kind of a canary in the mine for the global stock market. So as you can see right now, we see these weaknesses over in the KOSPI in the Korean stock market. Now this long bearish candlestick over here, the high I would see the high is something like a very strong resist. It poses a resistance to any upward momentum, right? And another thing to take note of is that for these recent changes, okay, you see that it looks like there's a technical rebound. Come here. In fact, if you want, okay, this is actually a pretty strong support line over here, and it's rebounding. But the way I see it is that with the weak volumes over here, it doesn't seem like this is merely a technical rebound, which suggests that there's a good chance, okay, for the Korean stock market to move further back to the support line. And if there's any major events happening elsewhere, especially in the US stock market or in the Chinese stock market, that is negative to the stock market in general, then it might even break down from this break through this support line, and then continue a new downtrend of the Korean stock indexes. The last one that I want to look at is the Singapore Stock Exchange. It is actually Singapore stock market is in a way it is boring, but it is relatively predictable in the sense that it has been. If I do a longer trend, it has always been trading around this range. All right, so pretty narrow in between the 3,400 to 2,500, rough about the 900 points of movement. So you can see that currently it once this is happening again, okay, in the recent past, where the Straits Times Index reaches the upper boundary of this trading range and starts to pull back. And in if you look at it, it is more or less forming the right side of the head and shoulder. Very interesting formation. So if anyone wants to do a trade on the Singapore's Straits Times Index, now one way is now you can actually initiate a position. Can initiate a position over here with a stop loss around the 3,300. Okay, and you can actually take profit when it hits this support line over here. And if it actually break through the support line, then the head and shoulder pattern is confirmed. Uh, it can be confirmed, and it's a big bear market for the Singapore stocks. So you can actually take the opportunity then to initiate another bearish position, adding position to it. And if not, if you can't do any shorting of the Singapore stock market, then at least you should consider liquidating your holdings, all your positions in the Singapore stocks, okay, until a better time. All right, so that's my take on the global stock market for the week ending 26 August.